Traditional financial markets operate on asymmetric information. Order books are opaque. Institutional positioning is disclosed quarterly with a 45-day lag. Blockchain technology inverts this paradigm entirely. Every Bitcoin transaction, every Ethereum smart contract interaction, every wallet balance change is permanently recorded on a public ledger readable in real time by anyone in the world. This creates an unprecedented data environment, the equivalent of knowing every trade executed in the S&P 500, the identity of every market participant, and the balance of every prime brokerage account, simultaneously and in real time. On-chain analytics is the discipline of extracting investment-relevant intelligence from this data. Firms like Glassnode, Nansen, and Chainalysis have built sophisticated platforms that transform raw blockchain data into metrics, signals, and alerts that institutional analysts can integrate into their research processes. This analysis explains the key metrics and how to use them. MVRV is the most widely followed on-chain valuation metric. By comparing the current market price of every Bitcoin to the price at which it was last moved on-chain, MVRV provides a measure of aggregate unrealized profit across all holders. When MVRV exceeds 3, holders on average are sitting on more than 3x their cost basis, creating strong incentives to realize profits. Historically, every major Bitcoin market top has coincided with elevated MVRV readings. SOPR provides a complementary signal at the transaction level. When daily average SOPR drops below 1, it means coins being moved that day were sold at a loss on average. This is a classic capitulation signal. In every major Bitcoin bear market, the bottom was preceded by extended below 1 SOPR periods, eventually followed by a reset as weak hands exit and strong hands accumulate. Exchange flows are the most operationally actionable on-chain metric for institutions. Monitoring net Bitcoin flows onto exchanges provides advance warning of potential supply-side selling pressure. The FTX collapse and multiple exchange hacks were preceded by unusual on-chain flow patterns that analysts flagged before events became public knowledge. Cohort analysis is one of the most powerful applications of on-chain data. By analyzing the age distribution of Bitcoin supply, analysts can distinguish between long-term holders who have weathered multiple market cycles and short-term speculative holders more likely to sell during volatility. Approximately 75 to 80% of circulating Bitcoin supply is held by entities with strong accumulation behaviors and minimal selling history. This illiquid supply acts as a structural supply constraint. The actual liquid supply available for market purchase is far smaller than the 21 million headline figure suggests. For institutions, tracking the ratio of long-term to short-term holder supply provides a leading indicator of supply-side pressure changes. When long-term holders begin distributing to short-term holders, it historically signals the later stages of a bull market. When short-term holders are underwater and begin capitulating, it typically signals the formation of a cycle bottom. The on-chain analytics ecosystem has professionalized rapidly, with several firms now offering institutional-grade data subscriptions comparable in cost and quality to Bloomberg terminals for traditional markets. Each platform has developed distinct specializations serving different institutional use cases. Glassnode has become the standard reference for macro on-chain metrics covering Bitcoin and Ethereum. Their research team produces daily and weekly reports read by institutional allocators globally, covering MVRV, SOPR, miner economics, and derivatives market indicators. For investment committees wanting a single on-chain data vendor, Glassnode is the default institutional choice. Nansen specializes in wallet labeling and DoFi analytics, having tagged hundreds of thousands of wallets with entity identities ranging from exchanges and market makers to specific hedge funds and venture capital firms. The ability to track smart money wallet activity in near real time provides genuine information edge for institutions participating in DoFi, token launches, and on-chain market making. The FTX collapse in November 2022 is perhaps the clearest validation of on-chain analytics as an institutional risk management tool. In the days before FTX halted withdrawals, analysts at Glassnode and Nansen flagged a dramatic and anomalous spike in Bitcoin and Ethereum inflows to FTX, coinciding with unusual wallet clustering patterns. These signals were visible to anyone with on-chain data access 72 to 96 hours before the collapse became public knowledge. Institutions that had implemented exchange flow monitoring and acted on the early warning signals were able to withdraw assets from FTX before the halt. Institutions relying solely on FTX public communications lost the opportunity to exit. The countercase is equally important for calibration. In late 2020, MVRV readings entered historically elevated territory that had preceded tops in previous cycles. Analysts who mechanically reduced BTC exposure missed a subsequent 100% price increase. On-chain metrics are most reliable as stress indicators and least reliable as precise timing tools in strong bull market conditions. The most common mistake institutions make when adopting on-chain analytics is treating blockchain metrics as standalone trading signals rather than inputs into a broader investment research process. On-chain data is most powerful when combined with traditional macro analysis, technical market structure, and derivatives market positioning data. Used in isolation, even the best on-chain metrics produce significant false positives. The practical integration framework for most institutional investors starts with the research layer, using on-chain data as a weekly or monthly input to investment committee discussions rather than as a real-time trading signal. MVRV and SOPR provide genuine value as medium-term valuation and sentiment indicators when viewed over multi-month time horizons. For trading desks with active crypto mandates, the real-time application of exchange flow monitoring provides tangible risk management value. Several institutional desks have implemented automated alerts that flag unusual exchange inflow spikes, allowing risk managers to reduce exposure before the selling pressure reaches the order book. On-chain analytics represents one of the most genuine information advantages available in financial markets today. The fact that every blockchain transaction is permanently public does not mean all market participants have the analytical capability to extract intelligence from that data. Institutions that invest in data infrastructure, analyst training, and systematic monitoring frameworks will have a durable edge over those relying solely on price charts and traditional financial data. The practical implementation path for most institutions starts with a Glassnode institutional subscription and a weekly on-chain research briefing integrated into the investment committee process. As the team develops analytical fluency, the framework can expand to include real-time exchange flow monitoring for risk management and Nansen wallet tracking for DoFi positioning intelligence. The long-term vision, already being implemented by the most sophisticated crypto-native funds, is a fully integrated research platform combining on-chain analytics, derivatives market data, macro indicators, and traditional financial analysis into a unified institutional intelligence system. This is the infrastructure that will define the best-performing crypto investment operations over the next decade.